morning, good afternoon, everyone. Welcome to EDEC Infra webinar. I'm Natalia Gaitarenko, and I'm here with Darwin Marcello, Project Director, and Nishta Manocha, Senior Research Engineer in the Green Infrastructure team. This is our fourth and the final webinar of the Green Infra Month webinar series. Today, Darwin and Nishta will talk you through the latest insights of inframetrics and sustainability reporting. We have 1 hour, 45 minutes of which Darwin and Nishta will talk you through the topics of the webinar, followed by 15 minutes of Q&A. As usual, please leave your questions in the Q&A sections and we will answer them after the presentation. Now, over to you, Darwin.
Thank you, Natalia, and thank you everyone for being with us today. Let me start telling you a little bit about inframetrics by Infra. First of all, inframetrics has academic roots. Inframetrics is designed to produce analytics based on large representative samples and using academically validated approaches rooted in modern financial theory and economics. More importantly, inframetrics has been created on the foundation of over a decade of research on unlisted infrastructure investments at the EDEC Infra Business School. Going into the details about EDEC Infra provides market indices, benchmarks, valuation analytics for investors in unlisted infrastructure equity and private debt, asset owners, asset managers, pension funds, consultants, and asset valuation professionals currently use our data sets. Our metrics track thousands of investments in 25 countries over the past 20 years. Our key indices have recently gained recognition from ESMA, the European Securities and Market Association. More recently, EDEC Infra embarked on a new ambitious project. We call it the Green Infrastructure Project, currently representing at least 3 years of work and several $1 million of research and development at EDEC Infra. The Green Infra Project has a dedicated team of data scientists and experts on infrastructure and climate risk. The climate risk and social risk products generated by the Green Infrastructure Project are backed up by scientific research, qualitative analysis, and unique asset-level data sets. Our metrics quantify transition exposure, physical risk exposure, and it also includes estimations of extreme climate risk at the asset level. Our climate products are divided into 4 types of offerings. Each one of them has been explained over the past 3 weeks, and today we finalized with the presentation by Nishta. The first of those webinars was transition risk exposure metrics, followed by physical risk exposure metrics, climate stress test metrics, and today's topic is on data for reporting. I want to emphasize that inframetrics, our unique data and analytics platform with the deepest available financial insights for unlisted infrastructure, will now include this 4 set of products that I just presented above. About the speakers, with me is Nishta Manocha. She's a senior research engineer in the Green Infrastructure team. She specializes in ESG regulations, taxonomies, and infrastructure technologies at EDEC Infra. Her background is in civil engineer, climate risk, hydrology, and urban flood management. I am Darwin Marcello. I'm currently the project director of the Green Infra project. Before, I was project manager of the World Bank Quality Infrastructure Investment Partnership and lead of the Global Infrastructure Connectivity Alliance. I'll leave you now with my colleague Nishta, who is gonna walk you through all the work that we've done on climate data for reporting. Nishta?
Yes, just a moment. Thank you, Darwin. Thank you for the introduction, and thank you all for being with us today. Over the next 30 to 40 minutes, I'm going to be talking about inframetrics and specifically those that focus on climate risk, transition risk, and social acceptability risk. Collectively, I refer to these metrics as the green inframetrics during the presentation. I will then be talking about the use cases of the green inframetrics and also about their alignment with international frameworks, and finally show you how to access inframetrics. Please note that there will be 3 polls during the presentation, and I thank you in advance for taking the time to answer them. So the green inframetrics, as Darwin mentioned, is part of the green infrastructure project that we carry out at EDEC Infra. And before going into these inframetrics and describing them, I would like to take some time to show you the research that has gone into creating these metrics. So over the past 3 years, we have worked on multiple initiatives such as frameworks and classification standards, like TICS, which most of you are familiar with, the ESG taxonomy of impacts and risks that we created in-house at EDEC Infra. Also, we conducted academic studies to establish the exposures of infrastructure assets to different types of risks. This is essentially a knowledge database created at a TICS asset subclass level. And finally, we have conducted surveys to understand what the market needs in context of ESG data for the infrastructure asset class. These initiatives have helped us build a technical knowledge surrounding what we do for green inframetrics, and also the know-how to create these metrics. I will explain these in a little bit of detail now. TICS is something that we have been using for quite some time now. It is now the industrial standard for infrastructure investment, classification, and benchmarking. At the very core, it consists of 4 pillars. So it consists of a business risk classification, an industrial classification, a geoeconomic classification, and a classification based on corporate structure, which we use to understand the infrastructure asset class. Within pillar 2, which is the industrial classification, we have 8 superclasses. For example, IC60 is transport and IC20 is environmental services. And these 8 superclasses are then divided into 101 industrial asset subclasses. For example, transport consists of multiple things like airports, roads, ports, etc. And environmental services consist of IC 2010, potable water treatment, but it's a very long list. It's a very extensive classification exercise of what each type of infrastructure asset is. And finally, the inframetrics for climate risk is actually available for these, it follows the classification that TICS presents. It's available for 700 plus assets worldwide across all the superclasses that TICS identifies. And as such is a good representation of the wider infrastructure world. The ESG taxonomy of impacts and risks was created about 2 years ago to help us understand what ESG means for the infrastructure asset class. What the taxonomy is that it's a classification system of environmental and social impacts and risks that are always relevant for an infrastructure company. It also contains a set of governance principles applicable to infrastructure companies. It is based on the notion of double materiality. What that means is that it accounts for both the impacts of an infrastructure company and the risks to an infrastructure company that you face from the environment and the society. It has 3 pillars, which is environmental, social, governance. And within the environmental pillar, it consists of 2 verticals of nature and climate change, while the social pillar has 4 verticals of all of the stakeholders that are stakeholders important for the infrastructure class, which are customers, general public, employees, and regulators. The taxonomy lists each and every impact and risk within these verticals for infrastructure companies. Now, in doing so, what the taxonomy does is that it provides a first-level understanding of how to approach measuring these individual impacts and risks for infrastructure. For example, a company can impact climate change by producing greenhouse gas emissions, and it faces a risk of climate change from physical events such as flooding, stormwater, heat waves, cyclones, etc. So the taxonomy actually lists out each of these individual impacts and risks. After creating the taxonomy, we embarked on a journey on creating a knowledge database. And the objective of this was to create a database which will help us understand what infrastructure assets are like by using basic principles and asset characteristics of each and every asset and linking that to its sector-specific impacts and risks. So it's largely an academic exercise that helps us identify what type of data sets should we use for making an analysis of the ESG impacts and risks for infrastructure assets in a way that is systematic and that can be carried out globally. A few points about this database: that it's a large theory-based knowledge database of infrastructure. It can be considered as a sector-specific extension of TICS. It begins with the basic design and engineering principles to identify an asset characteristics. That is, what are the key components and key technologies used in each asset type. It then identifies the impacts and risks of an asset as a function of these characteristics. More importantly, it identifies what are the individual factors to build ESG metrics. So if you were to consider estimating the carbon emissions of an airport, what are the 5 things or 10 things you will account for? It's information like that that is presented in this database. Finally, we look at 39 knowledge fields for 101 TICS asset subclasses. A summary of the knowledge fields are below, but each of these knowledge fields are then consist of another level of information that we identify. And as and when possible, the information that we collect or the knowledge base that we build is aligned with international frameworks such as the TCFD, Greenhouse Gas Protocol, etc. So all of this that I presented before, these are initiatives that we had in-house to start to understand what ESG means. Now, in addition to this, we conducted a survey last year, the results of which are on our website. There's a paper about it on our website. And in this survey, we asked investors to identify what are the relevant ESG impacts and risks that are important, and what are the sort of information categories that they need. And in this survey, we found that the impact of climate change, that is the associated transition risk from climate change, from carbon emissions, the physical risk facing an infrastructure asset, as well as the social acceptability risks that infrastructure asset face, were the top concerns for asset owners and asset managers globally. And all of these informed creation of our infraMetrics. So infraMetrics comes from using information that is identified in TICS. That is, it looks at each individual asset classes of TICS. It uses the ESG taxonomy of impacts and risks to estimate, to list the important impacts and risks for each asset class. Then it uses the knowledge database to identify the factors that we need to know to measure these impacts and risks. And finally, the focus on the infraMetrics that we build comes from the survey of asking asset owners and asset managers to see what is the information that they need. So once we know all of this, it gives rise to the green infraMetrics, which is a class of metrics that focus on transition risk, the second that focuses on physical risk, and the third that focuses on social acceptability risks. When these infraMetrics, of course, are available on our platform. And when you log into the platform, this is a landing page. The infraMetrics will be available under the tab of asset search and due diligence. While these are not online yet, but these will be released shortly. Now I will focus on explaining these different classes of green metrics to you. The first type of green infraMetrics that we have, or the first class of green infraMetrics that we have, is transition risk. In our previous webinars, we have explained infraMetrics for each category in detail. Today, I'll be giving you a short overview of this metric, but there'll also be a video. There are also videos of our previous presentations that are available online that you can refer to if you're interested in more details on how these metrics were created, what kind of results are available with these metrics, and other information. So the transition risk metrics focus on estimating the emissions of infrastructure assets globally. We have metrics that capture both the absolute carbon emission and the carbon emission intensities measured as a function of total assets, equity price, enterprise value, and revenue. The denominators of the carbon intensity metrics were actually defined so as to produce information in formats required by different reporting frameworks, so as to make these metrics aligned across different frameworks. I'll go into details of this in a few slides. Note that the other thing to note here is that the absolute carbon emissions are produced both at the asset level as well as the sector level. So it can also be used as a benchmark for any given sector. And we also have this information at the index level. Both the absolute carbon emissions and the carbon intensity metrics. While the transition risk exposure ranking is available only at the asset level. The transition risk metrics cover most type of infrastructure asset. That is, it covers 60 plus TICS industrial asset subclasses. This information is available for about 500 to 600 assets and covers the numbers for a few years. By geography, it's available for 23 countries in Europe, America, and Asia Pacific, and it covers the following TICS classes. I would take a moment here to conduct a short poll, which is what type of greenhouse gas emission data is the most useful for you? The answers could be detailed carbon accounting data, proxies or estimates of carbon emissions, and carbon emission benchmarks. We'll have about 30 seconds to answer this poll. Be 10 more seconds. Okay, I'm going to end this poll now. Thank you. And let's see the results. Okay, so we have in the leading categories, the most important, the most useful type of greenhouse gas emission data is detailed carbon accounting data, but it's followed very closely by proxies and estimates of carbon emissions. Well, it's interesting to see this. And in fact, when you look at these reporting frameworks, it is indeed the detailed carbon accounting data that's very relevant. But also looking at the audience here, I understand that as an asset owner, as an asset manager, where you have to look at hundreds of thousands of assets, you may not be able to go through a detailed analysis of each and every asset. So proxies or estimates could also be very useful in that sense. And also for risk management, proxies are very useful. I think that's reflected in this poll. Thank you very much. Let me move on. The second category of metrics that the green inframetrics have are physical risk metrics. And so physical risk metrics basically focus on the risks that any given asset can face from floods, cyclones, and storms at a 1%, 2%, and 3% probability of occurrence. We again look at these metrics in a few different formats so that it can be used to derive as much information from it as possible. So the first kind of metric that we look at, which is the physical damage at risk, this is essentially the percentage of asset that is potentially damaged in an event. For example, if there's a flood event of a 1% probability, an airport might be 20% damaged. So that's what the first metric will tell you. The second metric, which is looking back at the airport, if that airport is valued at 1 million and 20% of it is damaged, so the physical value of at risk would be 1 million into 20%, which is 0.2 million. This is what's reflected in the physical value at risk metric, which we refer to as PVAR. The third metric is the expected loss from physical damage in the probability of actually event occurring. So this factors in the probability of the event actually occurring and presents you the expected loss in millions of US dollars. And finally, a sector exposure ranking, which ranks the exposure of each asset in any given sector to the risks we're looking at, which are flood, cyclone, and storm risk, benchmarking these risks actually at the TICS superclass level. In terms of coverage of the physical risk metrics, these metrics cover all types of infrastructure assets, so it's across TICS. We have this information for 500 plus assets, and the data goes back up to 2019. In terms of segments, again, we have 23 countries in Europe, America, and Asia Pacific that are covered in this data set. And the segments by TICS are presented also here on your screen. Now we come up to the metrics of social acceptability. Within social acceptability, we provide three kinds of metrics, which is the first one being social impact index, which measures the social acceptability of infrastructure assets. This index reflects the general trend for industries and countries. Two, the social risk index, wherein this index reflects the level of disagreement within the public, as polarizing groups may hold divergent opinions of the same infrastructure, which is something we capture within the social risk index. And finally, we have a social attention index, which illustrates the trend of public attention on various ESG topics. So what it does is it provides a deeper understanding of the origin of the sentiment. There will be in the future another webinar that covers social risk metrics in detail in case you're interested. In terms of coverage, again, it covers most type of infrastructure. So this covers 68 fixed asset subclasses. The data goes back to 2016. But in terms of geographies, this data is limited to 5 countries, that is UK, in the Americas and Asia Pacific. And these are the TICS industrial subclasses that we cover within the social acceptability metrics. Having introduced these inframetrics to you in detail, I would now like to talk about the use cases of these individual metrics. But before that, let's have another poll. Let's see what does the audience think is the main use case for ESG data or the main use cases of these ESG metrics. Again, we have about 30 seconds to answer this poll. Thank you. Let's give it 5 seconds more. Okay, I'm going to end the poll and I'm going to share the results. It's great to see that everybody needs ESG data for one thing or the other. And it is interesting to see that how you need data for sustainability reporting and ESG risk management. So interestingly, and I cannot get rid of this. There we go. Interestingly, we asked this question in a survey that we conducted last year, wherein we had a survey of about 100 asset owners and asset managers globally, and we asked them to rank the individual types of risks. And as you see, identifying and managing risks to investment came up. So risk management is still important in terms of requiring ESG data. And the second important use case was sustainability reporting. And it's good to see that this is still the same. Since this webinar is focused on information for sustainability reporting, we will not be talking about the use case of risk management for now, although I will be touching upon it as and where appropriate. But we will be looking more towards understanding how these metrics can be used for reporting, not only to regulators, but also to the stakeholders and society. What I will be doing over the next few slides is I will be talking specifically about the TCFD and the SFDR framework, since these have consistently shown up to be the most important or the most relevant frameworks we report against. But also we can discuss the reporting against internal in-house reporting and reporting for risk management later. So the frameworks, again, just to reiterate, the frameworks we'll be talking about over the next few minutes are the TCFD, the SFDR, and the EU Taxonomy. The TCFD, or the Task Force on Climate-Related Financial Disclosures, was created in 2015 by the Financial Sustainability Board to develop consistent climate-related financial risk disclosures for use by companies, banks, and investors, mainly to provide information to stakeholders. As per 2022, the TCFD status report says that more than 3,800 organizations support TCFD recommendations. These include over 1,500 financial institutions responsible for assets over $217 trillion. And now TCFD supporters span about 99 countries and nearly all sectors of the economy. On the right, there is a snapshot of the 4 pillars of recommendation of the TCFD, which is governance, strategy, risk management, and metrics and targets. What we do with inframetrics is actually to provide information for the metrics and targets pillar. Looking at this in detail, we can see that the metrics and targets are further divided into 3 main categories, which is greenhouse gas emission, transition risk, and physical risk. And in addition to this, the metrics and targets also require, or recommend rather, to report against climate-related risks and opportunities. I'd like to highlight there the little box of reputation risk that falls under transition risk, which is to understand the reputation of any given sector. Now, if we look at how can inframetrics, or how aligned inframetrics are with TCFD, we can say that the green inframetrics can be used directly or as inputs or proxies for the following TCFD metric categories. which is greenhouse gas emission, transition risk metrics, and physical risk metrics. Just to make this a little bit easier, on the right are the inframetric, on the right are the naming conventions of the green inframetric categories, and on the left are the naming conventions of the TCFD. To show you a proper map, this slide maps the metrics we produce to the recommendations of the TCFD. As mentioned before, on the left are the inframetric categories, and on the right are the TCFD metric categories. So the inframetric transition risk metrics are aligned to the greenhouse gas emission metrics. This is just the naming conventions. The physical risk inframetric category are aligned to climate risk metrics of TCFD, and social acceptability metrics created by the green inframetrics actually feed the transition and climate related risk metrics. Just to reiterate here is TCFD is a set of recommendations, so it allows you a little bit of flexibility in choosing what you report. But what we do is we provide, as I mentioned before, we provide the same metric in a few different formats, so as to make this easier in terms of so to make it more compatible across frameworks and to make it more usable with what you would like to report. In addition to the individual metrics and in addition to the individual numbers that we build, Green inframetrics also enables the benchmarking of greenhouse gas emissions to individual infrasectors. So for example, here we have the sector level benchmarks for physical risk and transition risk, which this is also something we've presented in detail in our previous webinars. But just to reiterate here is that the inframetrics platform will have these average sector level benchmarks across asset classes. And if you would like to learn more about these benchmarks, you can refer to the previous presentations. In regard to the SFDR or the Sustainable Financial Disclosure Regulations, they are part of the EU's Financing Sustainable Growth Action Plan, which was established to redirect capital flow towards sustainable finance. And SFDR requires asset managers and other financial market participants to provide transparency on sustainability and imposes mandatory ESG disclosure regulations. As all of you must be aware, these regulations come at two levels. So there are disclosures required at the firm level, which covers Article 3 to 5 of the regulation, and product level disclosures, which cover Article 6 to 11. The focus of inframetrics, or the applicability of inframetrics, is more at the firm level, using disclosure topics, which is more specifically speaking, this goes towards looking at the principal adverse impact indicators required for firm level disclosures of the SFDR. Green inframetrics can be used as proxies for the following climate and environmental related indicators as required by the PAI, which is the principal adverse impacts of the Sustainable Finance Disclosure Regulation, which is indicator 1, greenhouse gas emissions, indicator 2, carbon footprint, and indicator 3, greenhouse gas intensity of investee companies. As mentioned before, since we produce metrics in multiple formats, they're compatible with different frameworks. And since EDHEC has a very large database of financial information, we can produce these metrics in a format that is compatible with the SFDR. However, to note that these are proxies, inframetrics are built on proxies and not an extensive carbon accounting exercises. So that's something to keep in mind. Similarly, on the right are, on the slide again, on the right are the categories as named by the principal adverse impact indicators of the SFDR. And on the left are the green inframetric categories. Finally, we look at the alignment with EU taxonomy. Now, at the risk of oversimplifying what the EU taxonomy framework is, it is 1, a list of activities that can be considered sustainable. 2, provided that it meets a few criteria, which is the technical screening criteria for each objective, and the do no significant harm criteria for the other objectives as defined by the taxonomy. In regard to the first aspect, which is listing out the sustainable activities, we recently conducted an extensive mapping exercise that maps the industrial pillar of TICS by identifying its key activities. So for each 101 asset subclasses, we first identified what each main activity type of this asset class would be. Then we used this activity list to compare it to the NACE classification system, which is the statistical classification of economic activities used by the European Committee. This mapping, and since the EU taxonomy mapping, all of the activities there have a NACE code, barring a few new activities, which will have a NACE code once it's updated. So since, again, I'm sorry, coming back to this, since all EU taxonomy activities have a NACE code, and in our internal mapping exercise, we took each text asset subclass, listed its main activities, and then mapped it to NACE. We are then able to map ticks to the EU taxonomy. And what this does actually, it helps us filter out the companies that have a potential to be aligned to the EU taxonomy or not. So this is not telling you that the screening criteria are met, rather it's telling you from a broad macro perspective. So a study at the sector level, it's telling you how many companies have the ability to be aligned with the taxonomy or not. So at this level, it generates powerful insights for infrastructure investors. For example, on the left, you see the percentage of companies in any given country that have no taxonomy aligned activities. And on the right are companies which have 100% of the activities that could be potentially aligned with the EU taxonomy. There is an upcoming research paper on this, which is currently a work in progress, but it should be available in August 2023. And coming back to infraMetrics, the taxonomy also requires assessing the technical screening criteria and the do no significant harm criteria for each activity. So the taxonomy, in fact, issues detailed guiding documents for this purpose. Like the SFDR, green infraMetrics again can be used as proxies here for assessing the technical screening criteria and the do no significant harm criteria. Coming back to, so again, since we produce metrics in the units and formats required for EU taxonomy alignment, you can use this as proxies. To give a short summary for TCFD and the European landscape, first, green infraMetrics can be used directly and as inputs or proxies for a subset of TCFD reporting requirements. Two, green infraMetrics can be used as proxies for a subset of the mandatory principal adverse impact indicators of the Sustainable Finance Disclosure Regulations, which are the SFDRs. Three, green infraMetrics can be used as proxies for assessing the distance of a company's activity to the EU taxonomy technical screening criteria and the do no significant harm criteria, although you might have to add on some information here. Finally, the green infraMetrics can also be used for risk management and benchmarking climate and carbon performance. I'd like to take a minute to conduct one more poll, which is what frameworks do you use to assess and report ESG performance? Is it the Task Force on Climate-Related Financial Disclosures, TCFD, the SFDR and EU taxonomy, both of the above, which is TCFD and the SFDRs, SBTIs, or just others? Let's give it 10 seconds more. Okay, thank you for your answers. I can share the results on your screen now. So it's only 7% of the people use only TCFD, 21% use only the SFDRs and the EU taxonomy alignment, while about 50% of the audience use both the TCFDs and the SFDRs. This is interesting, and again, reiterating that this is why we looked at infraMetrics and sought to explain the alignment to these frameworks. Okay. Finally, the last section of this presentation is to show you how to access infraMetrics. Once you log into the infraMetrics dashboard, all of our metrics are in these two tabs that you see highlighted in pink. One is the baseline climate risk and the social acceptability tab that follows just beside it. So these metrics will be here. But if you don't have access to it and you would like to have a look at our platform, please go online, look at infraMetrics, and you can request access to the platform. And someone will be in touch with you to provide this access to you. Thank you for your time to listen to this presentation. I'm happy to have any questions, if any.
Thank you, Nishta, and thank you for your presentation. It nicely summarized the work at ERIC Infra on climate metrics and how useful it is for the purposes of reporting. We got some very interesting questions for you. We may not have time for all these questions to be answered live, but what we're going to do is we're going to send we will distribute an email with all the questions and answers to each one of them. Okay, so let's get started with the first question. Are these exposure profiles you mentioned in slide 12 available online?
Thank you for the question. Yes, the intention is actually to have all of this information available online and as a public good. So the exposure profiles are currently in the process of review, and we will have them online as a database or as documents to read over the next year.
Thank you. Is the ESG data you mentioned available on a TICS and sub-region basis? So, for example, renewable data in Europe? Is this something I can do with the kind of information it's being produced?
Yes, of course. So if you log on to the infraMetrics platform, it allows you to slice and dice information as you like it. So you can look at this information by TICS subclass level, TICS superclass level, and of course there are tabs of geography. So you can play with it as you like.
Yeah. Thank you. So you also made several mentions to how the data produced by ERIC Infra aligns with the TCFD and SFDR and EU Taxonomy. Can I engage ERIC for my company sustainability report?
Thank you for the question. So ERIC, as a primary business, we produce sector-level indices and sector-level benchmarks. We do not typically engage in individual company assessments. So we will follow the same process for ESG information. This will be available at an asset level. It will be available as sector level benchmarks. Well, that's what infraMetrics is. It is a representative index, which presents this information across geographies and sectors. So I'm afraid that's what it will be, and we won't be doing individual company level assessments for now, or individual company level consulting sort of roles for now. We do have company level information. So if you're tracked by us, we have that information for you. If not, no, sorry.
Thank you. Another question related with the EU taxonomy. Could you provide an example of do not significant harm alignment to the EU taxonomy, or what constitutes not doing any significant harm according to the EU taxonomy?
So, so the EU taxonomy is built on 6 main objectives. To show compliance with any objective, what you have to do is first you have to meet, so say you're looking at objective 1, climate change adaptation. So you have to meet the screening criteria of climate change, mitigation is objective 1. So climate change mitigation screening criteria, which is your emissions should be depending on the activity you're looking at, but typically about 100 grams of carbon per unit of production. And in addition to showing that you comply with the screening criteria, for the other 5 criteria of the taxonomy, which cover biodiversity, water, circular economy, mitigation, etc., there are a set of recommendations or a set of guidelines produced by the EU taxonomy at an activity level, where you have to qualitatively or quantitatively comply with each and every do no significant harm criteria requirements. And I think that was the question was all about, right? How does this whole thing work? But yes. in terms of infraMetrics, we only look at the do no significant harm criteria for climate change mitigation and adaptation, which is the carbon emission, the carbon intensity metric. We don't look at the others for now.
Thank you, Nishta. When it comes to reporting, should I use infraMetrics as a reference to build my own estimates, or should I use it, or should I use infraMetrics directly?
That's a great question. Thank you. Well, actually, the answer depends upon the framework that you're reporting against and the purpose you're reporting for. So as I mentioned before, that there are two purposes for this for reporting information. One is reporting to the regulator, and two is for risk management or reporting to internal stakeholders. So if you are actually looking at regulatory reporting, what we provide are metrics for the current financial year, which are quite aligned with TCFD, in fact. But if you would like, you could also use this information as baseline to build additional metrics. Further, the reason that we provide these metrics in a range of formats is for you to actually either use it directly or to build other reporting metrics on. Secondly, and I think that's a more interesting use case of this. Another interesting use case of these metrics are for internal reporting. I would just like to reiterate the usefulness of sector level benchmarks that infraMetrics offers across geographies and across all the 101 types of fixed asset subclasses and 8 superclasses. And these benchmarks can indeed be used directly to compare ESG performance.
Thank you, Nishta. It was mentioned during the presentation that infraMetrics is built on a large representative sample across the infrastructure sector. How can a company use infraMetrics to report if they are not tracked by EREC Infra?
Yeah, well, the great thing, again, coming back to what infraMetrics is, that it is a very representative index where we have considered the availability of investable assets, geographies, and sectors while building infraMetrics. So what infraMetrics does at the core is that it provides the best representative benchmarks for investors in infrastructure. However, if you would like to use these benchmarks and you're not tracked by us, if you know your TICS class, so if you know what type of classification within TICS you fall under, you can just look up the benchmarks for that. And well, if you, okay, short answer, if you're not tracked by us, use your benchmarks, use the benchmarks that we provide. If you are, you can use a whole lot of other information.
Thank you, Nishta. As I mentioned before, the questions that we had no time to answer live will be included on a long list of questions and answers to all the participants. We have reached the end of this webinar, and is also the end of our EREC Infra Green Infra Month for 2023. I thank everyone for your participation and comments and questions, and we invite you to watch the videos for the webinars, which are available in our website. Join us for our next event. It's going to be on climate risk and infrastructure in Asia. This is going to be on June 22nd here in Singapore. Thanks again, and we hope to see you soon.